Hello, Warriors. I echo AJ's sentiment. Let's have a great week. So pretty much getting follow through from the strong employment numbers that we had on Friday. Hi, team.
Morning,
How's
Dale.
everyone doing?
Morning, Dale.
Hey, guys. So, yields are up again. Now, I know guys are looking for this rally in 10 years to fail and head down, but pretty good response off 360. Looks a little bit like the dollar. We also, the yen has not yet taken out last week's highs. So the dollar and the yen look the same. Are they failing rallies, or are we going to blow? I still think that we're going to take out these highs. Euro, we could still make a new low here, 650 low, maybe even trade, 105.5, 106 level, and they finally turned the euro pound spread, and what a great short this was from up here. Same thing with the metals are selling off. They're trying to bounce back. Gold still looks vulnerable. Maybe not as more vulnerable than silver. I'm going to be keying off of platinum, which is a weak sister, which should end up being the leader. And their target's down around 800, which tells me I probably don't have to be in a hurry to get long either of these. So Ryan, coming into today, really no surprise, follow through action from Friday. I guess the only surprise is cable picking up, becoming the leader to the downside. It was the leader to the upside. Any particular reason why it's really giving back a lot more of this rally than the euro?
I think it's just the usual volatility difference that we often speak about. If euro dollar moves 30 pips, cable's moving 60 pips type thing.
Okay.
But you can look at euro sterling and see that there's been a bit of a
bounce
pullback for the euro after coming off those lows.
So we'll see what happens. E.g. here, this was a breakdown, right?
Yeah.
So
same with cable down to 123. That was the prior point. So it's been playing nicely. You can pretty much play this one, as I said last week on the Flow Show. Play this one on the big figures and half figures. 124.50, it's resistance again. 125 is a bit loose, but 125.50 is solid. 123 is going to be a bit solid. Maybe 123.50 is going to be solid. So it's. I don't know why yields are rallying again. Yeah, we're back trading the fundamentals, but considering the Fed's expecting to pause next month, you wouldn't think yields would be rallying so much. But that strong jobs number, the market's probably playing soft landing again.
Yeah, because when I look at this, I could say, just like the dollar and the yen, that maybe it's a failing rally.
Yeah.
But, I just keep coming back to this, weekly formation. Whoops. A little Twilight Zone action there. That it still looks like, we could get an upside breakout. And I don't think the market's prepared for it if it happens.
No, well, that's actually something I spoke about this morning when I was speaking to Michael Brown on the trade-off. One thing I don't think the market is really thinking about, outside of the higher for longer thing, it's the neutral rate. A lot of central banks are thinking 2-3% neutral rate. What if inflation doesn't come down as much, hovers around 4 or 5%? Are we going to have to see a higher neutral rate? Rates only dropping to 4%, say. And I don't think a lot of the market's talking about that yet.
Okay. You think the Fed's going to pause?
I think it's 50-50. I think that the next CPI data could be the swinger. It's certainly going to be a potential volatile one for the market. I don't know. I think I'm 50-50. I'm really on the fence. I think they've got enough cause to hike. And if the CPI is strong next month or next week, then they'll hike. But if it's not, or if it's roundabout as expected, they've got a chance to pause and give themselves a bit of breathing space.
Doesn't this like parabolic move we've had in tech and, a lot of, equities in general give the Fed room to do it? Because the markets it's not like they're hiking with the markets under pressure. The banks, yes, but the market, no. And, he was talking about wealth effect. So do you think the Fed may look at this without saying anything and hike because we're, starting to get feverish? I would call it feverish with, what happened with NVIDIA and AI, and certain real estate markets are actually appreciating again. So, it's whatever he wanted to accomplish, he hasn't yet. He hasn't cooled the wealth effect off for people.
I think that's a fair point. On that aspect, they have got a bit more rope to play with. But it's going to come down to all these tightening financial conditions. That's been their key point at the last few meetings, and what's happening there could be the decider for rate hikes. But I think they have got room to hike, but we're close to the end. We've got to be close to the end up here, haven't we?
Yeah. US dollar won. What do you do here? I would try it on a pullback. I don't know what to do here. So maybe what we have is follow through in all these markets, and we get some type of turnaround Tuesday action tomorrow. At those levels you were talking about. I want to bring Kman in, and thank you, Ryan.
Dale. Good morning, everybody.
Thank you, Ryan. And Kman, buddy, welcome back.
Hi.
You have your sea legs back?
Yeah, sort of.
Okay.
Still trying to get into the boat.
Okay. Just any impressions on the performance of yen since you've been away and yields?
It's pretty strong, right? And I showed on the flows show a bit of a discovery, or more than anything else. But the setback that we had into the mid 138s last week comes in right along a broken trend line, which on the retest held. So that's going to be an interesting one down there for a hold if it holds. And for what the dollar is concerned, selectively, I would say, because there's some EM currencies that don't enjoy the stronger dollar. But it's still a buy on setbacks right now, just because of this constant repricing of Fed expectations. That's what I kind of see when I look back at what happened over the past 10 days.
I know I was short, and the only reason I covered Thursday was because of the NFP. I didn't know what was going to happen. So, this is around here is where I want to buy the dollar. I didn't get long the dollar, so I don't know what to do with the dollar. As far as, go ahead.
At the start of this week, it looks like it either looks like a slow grind, or in some currencies, people would like to counter trade this one. But then again, if you look at there's a lot going on in the crosses as well. If you look at stuff like Euro Canada, we spoke about this morning. Well, there's a lot going on on the crosses.
Aussie. The Aussie chart, which looked the worst all the way down in the last week or so, has had the most relative strength compared to European.
Absolutely. Euro Aussie is coming back to rest on the 162, which is also a relatively important level. And yes, the Aussie dollar is doing better. There's some expectations that they may go for a 25 BP hike, late in your evening, early in our morning. So that is probably keeping the market on its toes, and we will see what happens after the decision, because any central bank decision lately has seen 24 hours later the currency is actually weaker, whatever the central banks have been doing. So we may be in for bit of similar action, perhaps, if it caps under 66, 50, 60 on the Aussie dollar. I still think there's a case for it to trade lower again, but yeah, we will see after the RBA.
Okay. Gold silver ratio, distributing. Could we get another high in the gold silver ratio? We'll see. It's a tough call for me. I was looking for 85. It went to 85. It's come off from 85, but I'm not sure if this is it. So I come in with a lot of I don't know. I'm not ready to buy the metals yet. Keep an eye on 1918, 1920 in gold. I've been talking about this breakout line that Blake showed, I don't know, about 2 months ago. And, when we broke out back in March. So we'll see what happens down there. I think it's a magnet, and I think we'll test it. For stock jocks, just a couple little shifts. On Friday, the NASDAQ was weaker than the S&Ps for the first time in a millennium. And the same thing is happening today. So, you look at NAS, dailies confirming, but most of these inter-day, like the 4 hour, looks like it could be a 2. It's not confirming up here, while now the S&Ps, which were lagging, are confirming. So there might be some rotation starting to happen between tech and see if they could broaden out this rally or not. And then we're also approaching what a lot of people were looking for sells, 43.40. That's the way it's been trading. It could be one good day. And I remember Blake saying the day that they passed this, he was going to pass the debt ceiling, that he was going to start looking for shorts. One thing caught my attention. Did any of you guys see the address that Biden gave from the Oval Office? Anyone see that?
No. Did he fall over again?
Well, no. You're right, man. No, he was spinning around on its chair, going wee. Anyway, underneath the presidential seal, it had a headline saying "Crisis Averted." Crisis averted. And you know what it made me think of? Mission accomplished.
It's amazing. It's amazing that they managed to resolve a crisis they created, and then they come out the heroes.
But anyway, I mean, it's like everything's okay now. Yeah. But all the things that are going to happen, like all the bonds that are going to come to market. I still think this is the key chart, and until it negates this sell-off, here's TLT. So it was interesting last week. You see this line? It was rejected, and that's the weekly wedge line. See that? So I guess if we could get above last week's high, which was 103.60, it'll stabilize it. But so far, it just looks like we had a breakdown. We retested the wedge line. They're coming in a point lower today. So they'll be at par 99. And I still keep looking at these lows and seeing that they were, they were confirmed. And really all the bonds have been able to do is move sideways. It doesn't look like a bottom to me. Any views on this, guys? Blake, Grega?
Hey, good morning. I don't think Greg is here.
I know. I was just calling any name.
No, I mean, it looks like yields are going to continue higher. I mean, that's you're thinking this is where the bond market continues selling off, right?
Yeah.
So I mean, yields look strong. I have to say that the dollar yen above 140 probably matches that too.
Yeah.
But you were talking about something in particular that I think is something that I did talk about during the week ahead video, is that you are starting to see leadership sea change, if you will, where the NASDAQ is going to start, looks like it's going to start underperforming the rest of the market. Here, I'll show you the chart, and I don't know if you saw the week ahead video, Dale, but let me take you to this this chart really quick. And Kman, welcome back, by the way. It's nice to have you back. So welcome back, buddy. So you'll see from the beginning of January, right, this whole year, this is the NASDAQ outperformance of the S&P. And notice how it's starting to turn since the last few days. So that reversal in the NASDAQ is scary because everybody talks about this huge all these big tech, mega cap tech names that are driving the market. And now what if they hand off the baton and you start to see this move from out of some of these big tech stocks into the rest of the market?
Yeah, like Russell. Look how cheap Russell is historically to the rest of the market.
It is, yeah. I mean, you could do the same thing to the Russell, and you could probably do it to every market. And the Dow is starting to show you a bit different here as well. So yeah, I mean, you got the Russell; it's up 3.5%, not this morning, but from yesterday or on Friday, rally off a pretty key support as well. So you're seeing that and the Dow bounce off of support as well. Off of you can see this minor 50% retracement. Anyway, the point I'm trying to make though is that we're starting to see leadership change. I do worry about that because if you take these mega cap stocks, if they start underperforming grossly, and then then next thing you get the reverse effect, and then stocks actually start feeling some downside pressure if you don't get total rotation. So we should continue to see the Dow, S&P, Russell outperform the NASDAQ 100. At least that's what I think. What you don't want to see is you don't want to see the NASDAQ 100 roll over. And if that starts to roll over, that's where I start to get a little nervous. Of course it's it's breaking out and everything else, but see, we hit new highs on divergent relative strength. You just don't want to see it going in a full-on retreat. If that starts to happen, then you're going to start to see, I think, flows come out of the market, and that's where you're moving the bond market that you're talking about, Dale. That's when you're going to start to see bonds, tick higher and yields really start to come down. But check this out. Remember, you were talking about, and I brought this up in the chat room. By the way, if you're not in the ForexAnalytix chat room, let me just show you. This
Nikkei.
is, well, yeah, hold on. This is, you can see Kman. He's been posting charts ever since he was just on with you a few minutes ago. This is where we post charts and we say good morning and this and that and the other thing. But this is the Nikkei, right?
Yeah.
Well, we were talking about this is where you talked about the 3 drive last week, right? We were heading up towards here. Well, that's more of it than a 3 drive, right? That's a breakout. And I mean, look at the Nikkei just blasting.
That's what NASDAQ
higher.
did. Yeah. NASDAQ did the same.
Yeah.
Ever since Buffett said that he was investing in Japan, there's a whole legion now of people investing in Japan, which is keeping the Nikkei very well supported.
Yeah, I mean, and this breakout is massive. I mean, we are, again, I'll have to go reference charts that we haven't seen since 1980. Let's go to levels that we have not seen since
1990, I think.
Yeah, I guess it is right at 1990. We still have to go a little bit further before we get towards the early 90s. So I mean, yeah, I mean it's crazy, right? I mean, these are levels that here they are right there, and massive breakout. Obviously, divergent relative strength on a weekly basis, but I mean, do you really want to stand in the way? That's the real question. So big moves there. Also, I don't know. We didn't talk about it. What's going on with OPEC? You saw the production cuts over the weekend, and I'm sure you guys talked about it on the Flow show today. But you saw this gap higher in crude, and then it got slammed back down. Do you guys think that's because Russia's like, screw you, OPEC, we're gonna just pump as much oil as possible and sell it? I mean, what do you guys think about this price action here. That was a big failure. I know it's kind of picked up, after almost filling the gap. It's bounced back a little bit. But what are your thoughts here, Ryan, Kman?
So I think it's easy to look at it with hindsight now that when the Saudi mob banned all the press because they wanted a big announcement, that was probably half behind the rally we got on Friday. And it's a case of, buy the rumor, sell the fact. So, yeah, it seems like the Saudis might be a bit out on their own with their production cuts rather than, everyone else jumping on the same bandwagon, though the rest of them have said they're going to keep the production cuts going. Proof is in the pudding. Yeah, I don't think this gap is going to last as long as the one in April.
Yeah, exactly. But you know what? I mean, it's going to keep crude oil probably, I would venture to guess, above 70. But let me ask you guys this. I mean, this is like these are like, inflationary type of moves from OPEC. And it's going to hurt, central banks, and they're wanting to claim victory on inflation. Even though we're seeing a lot of disinflationary pressures, this is going to make their job a little bit more difficult, I would think, right? Kman, do you have any thoughts here on crude oil?
Not a lot right here and now, but I tend to agree it's going to probably keep it above 70 right now. I don't know because the extra cuts only take effect in July, is it? If did I read that correctly? So we've got another month or so before the extra cuts kick in. So it may just keep oil in a range right now, and then but there's stuff still going on, and again in between Ukraine and Russia, so that may have an impact on energy as well. I don't really know around here, to be honest. No.
Yeah, well, I know, and to be honest, you're probably still thinking about Belgium.
We have a breakdown in Bitcoin.
Well, actually, we'll talk about that. But I want to make sure I mention Simon. He said, Blake, Russia and rest have said they keep cuts until the end of 2024, and I believe exactly what Russia is saying. I mean, I really do.
Yeah,
honestly,
I take that to the bank.
All right, you were talking about Bitcoin, Dale. Bitcoin and Ethereum both have been in this like descending, I'll call it a descending channel. You can just kind of look at it like this. They're not really going anywhere. However, I look at Bitcoin, and this is where it matters. This is where the rubber meets the road for me, is all around the 25,000 level. Big breakout point, big pivot area. You can, I don't know why that one deleted, but anyway, you can see these breakout points. That's all that matters to me. As long as we're above 25,000, it's not too scary, but we get below 25,000, and then maybe that gives you a little bit more of a broad picture of what the market's thinking about risk. I haven't really dealt a whole lot with cryptos. I really don't care about them at all right now. But you did mention gold, and this is a big deal to me. And this is one of the other things that is moving in tandem with yields. You got yields moving higher, you got gold moving lower. Big support right here. And yes, we talked about this trend line. Dale, you mentioned that a little bit earlier. It's still a big deal to me too. Yeah. This 1930 level, if we break that, and we got like around 1920 is where that trend line comes in roughly. Yeah. We started getting below that, and then I started thinking gold's got a much deeper pullback. I mean, we could really, below here, we could really see, 200-day moving average and, mid 1800s. That would obviously also mean that the dollar yen is probably trading closer to 145. And yields are going a lot higher in a situation like that. That's one thing I'm obviously very, very carefully watching, because I am trading these yen pairs, and Kman, you pointed it out a little bit earlier. You said it. We held the 138 level. This is a very big level as far as I'm concerned as the dollar yen goes. Dips have held. It's going to be interesting to see if the dollar yen can take out new highs, because if it can, then we target that 142.50. I'm not sure, if we're if this was it, or if we got one more leg higher, based on what equities are doing and what yields are doing.
Blake, to do a measured move on the breakout over 138, and you get even higher numbers. Say at that flat line at 138 and the whole formation, I don't know where it started, about 128 to 138.
Well, yeah, you can. Well, when you have like this is a bullish wedge, right? So when you have consistent highs and higher lows, it's a bullish wedge. So the minimum breakout should take us there, and that's why I'm like, okay, well, we're going to see 142.50. That's been, if you listen, like the
not the whole formation, just a portion of it.
All the technicals lead us there, but we obviously are stalling a little bit. So, whenever you get a stall and if you fail to make new highs, then I start to second guess, like, are we actually going to reach that target? So to me, it's all about 138. As long as we're above 138, you got to think the yields continue higher. Gold's going to trade weaker. We're going to stay in breakout territory. We get below 138, then the dynamics change completely for me. That's where everything shifts technically for not only the dollar yen, but every other yen pair out there as well. So
and yields and everything.
Yeah, exactly. So I want to say that today, we're going to be watching the ISM. We have the services ISM coming out. It's not going to be obviously as important because we already got our look at the jobs data on Friday. We do have the RBA tonight, and so Ryan, you have any expectations about the RBA?
Heads or tails, mate?
Heads or tails? Well, I mean, they're going to keep rates unchanged, right? I mean, that's. I think they're going to keep rates unchanged, but we have to expect them to have at least a hawkish, statement that to keep the door open to raise rates. But are there people that believe that they may hike here?
Yeah, it's about 2/3 thinking they're going to hold, and a third of these economists and experts think they're going to hike. Both camps think that another hike is coming, whether they do it now or later. And it's part and parcel. It's the same situation with the Bank of Canada. It's the same situation with the Fed. The explicit forward guidance has gone out the window, and the market is going to be playing guessing games going into pretty much most central bank meetings now. And that's choppy for us because we don't have a full-on expectation going in. They could hike, they could hold, they could hike and say that's it, we're pausing again, or they could hold and say we're pausing, but we're going to hike the next meeting. So for trading it, you've got to be very careful because there's two-way risk with all this.
And I have to say the false breakdown from last week. I didn't expect it to give us a complete full-on false breakdown, but with stocks moving higher and breaking higher, I mean, it made sense that we rallied. So it's going to be an interesting one, and also the Bank of Canada this week as well. We're faced with the same issue where we don't know exactly if we're going to get a rate hike or not, right? So this uncertainty is good, though. I mean, that's what creates volatility, but it makes trading ahead of it a little bit more dangerous, right?
Yeah, exactly. Yeah. Especially at the time that it happens, we're all tucked up in bed with Teddy when that's coming out. You might be awake for it, I think, Blake, but
I'm gonna have to stay up for this one. I usually it's right on the cusp of my my bedtime, but I'll probably stay up for this one in particular because I think it's going to be important. And make sure you guys are all in the ForexAnalytix trade room or chat room tonight because I'll be in there, kind of monitoring it before I head to bed for sure. Hey, anything else on your radar before we hand it back over to Dale? I know you got Daryl. I said Dale and tried to mention Harold at the same time, and then I got this, amalgamation of some weird right. You have Harold Malmgren coming on today, which is he's always great to listen to from a macro point of view. But Ryan, any thoughts going into today? Anything you're looking at in particular?
Yeah, keep an eye on the ISM later. The services ISM, see if you've got that further divergence between manufacturing and services, and obviously look at those price components as well that caused the flipping rate expectations last week.
All right, sounds good. Kman, any thoughts on anything that you're looking at in particular?
Yeah, 106.40 euro dollar should be a bit of a key level. If that goes, it looks bad. And then I was a little surprised about how fast sterling came back down. So
yeah, that's been a really big sell-off.
Yeah, and I was asking Ryan about that. I'm going to be very interested to see what's happening around 123, and then 122.60, is a little bit of my magic level over there. So
yeah. I mean, we hit the 618 retracement, the golden
and
fib and underside of that trend line, and rejected like crazy. I mean, and there was no UK data last night, was there? I mean, I'm looking around, I'm like, all I saw is European PMIs.
PMI was actually a little better than expected. Yeah, so I'm kind of wondering if 123 or just below wouldn't be a good level to try something, but for the time being, watching.
Yeah, crazy move in the cable. And last week I was talking about how the cable was, how strong it was, and we were all trying to sitting around scratching our head. But I guess that's kind of part of having a fairly illiquid market where everybody's just kind of trying to figure out what's going on too. So maybe it's all flow related. Anyway, Kman, it's great to have you back. Ryan, thank you so much for your thoughts. Dale, I hope you have a great interview with Harold. And I'm going to say, guys, if you haven't checked out, ForexAnalytix, make sure you do so. Come join us in the chat rooms there. We're probably one of the most busy communities out there in the market. So we'll see you there.
Good minds, good hearts.
Cheers, guys.
Thank you, team.
Thanks, Dale. Thanks, everyone.
Harold, welcome back.
Hey.
Time flies, huh?
Dale.
Yeah, time flies. It's like, I don't know, the older I get, the faster it flies. So good to see you. Chinese New Year is your backdrop. Why?
Beginning with China, everything has changed dramatically in the last 6 weeks, and the news has completely missed what took place. And I think the markets also have missed. Let me make it simple. Xi Jinping has become really nervous about problems of disloyalty or questioning of him internally, and he's worried about what the U.S. is up to in terms of turning off technology to China. So he did something remarkable. Since Mao, state security, their espionage and national security agency was inside the Communist Party. But within the last few weeks, he removed it from the party, established it as a separate agency reporting only to him, so that the CCP, the party, is now under supervision of state security. Now, what it means, boiled down, is that he transformed what was a centralized socialist communist economy into a police state. And under the new rules, already, for example, in Hong Kong, there's a trial of Jimmy Lai, the biggest journalist, producer, and he was warned in court that the charges against him were now a matter of state security. He's a British citizen, but he was told you can't have British lawyers. All the Chinese domestic laws are null and void. You are now under supervision directly of state security. Now, what this means to the market is from now on, any kind of business transaction, contract, commitments are up for grabs because they can be subject to change. And that's why they have now started raiding U.S. companies like Bain.
And Micron recently, right, Harold?
Yeah, this is all part of a process of intimidation.
Why don't they go for Apple, Harold? It would help my position. Why won't they go for Apple?
Well, my advice to Apple is you better hurry up and get out of there before they take the rest. But Apple is somehow very cozy with the wealthy families in China, so they're going out slowly. They are exiting, but also they're having trouble finding enough qualified workers in India and other such places. So, but what this means is everything's up for grabs. Every business in China is subject to interruption at any time for reasons that no one will understand, because the laws don't matter, the contracts don't matter. So this is a big change. Now, what's happening in the currency market, I can tell you, I'm very close with Singapore. And I have clients that are family offices in Singapore. These family offices, are Chinese money that has moved to Singapore. And the amount of money in the last few weeks is huge. We're talking hundreds of billions of dollars moved. Now, you won't see it so easily because it's done in the most complicated ways. Now,
and is that what's behind yuan weakness? Here's the U.S. dollar yuan chart up here, Harold. Yuan getting
part of it, and part of it is Chinese policy. They're talking about stimulus, but only to developers. But they're not talking about stimulus to people who owe money. They're not talking about real domestic stimulus. So if you know China and you're in it or betting on it, you have to say, there's no way forward unless they let the yuan go. So right now it's at, let's say, $7.13. 7.13. It'll go to 7.20 soon. Probably hit a pause, but where it will be 3 or 4 months, at least 30-40. It's going down, and it's going to
okay. So 740 was the high in 22.
We're going back there.
That's going back quite a 22. If I go back,
Yep.
Oh yeah, I see. If I go back to 07, it was 82.
Yeah, it's going to keep going for a while. It's a matter of time.
You're the second smart guy I know who, well, besides the guys here on the team that are very bearish of yuan, bullish a dollar and bearish a yuan.
Yep.
I think so. The policy is security over profit.
That's right.
That's and that's why they're starting to say, get out of here. So why can't G just say don't buy iPhones anymore? We manufacture phones, and really take down an icon. And how long are they going to do this before they actually go ahead and cross the straits and invade Taiwan? Is it next year, Harold? Is the drumbeat getting loud enough with all these close calls on the South China Sea and in the air with Russia that we're edging closer and closer to a hot war?
Hard to say. Xi Jinping is running everything. It's a one-man show. And, I was deeply involved with Russia in the Cold War. And early on, it was a one-man show. First Joseph Stalin, and then various others. Hard to predict. However, Chinese military is not really ready. And there is a concern in the military. Our military is also making a calculation that with the birth rate collapsing, and the young women in China refusing to have any kids. If they go to war with the U.S. firepower is so great that they would probably lose 2/3 or more of their manpower in one battle. Whether they win or lose Taiwan, they have to rebuild the military, and they don't have the young people base to do it. So they are already, their military
sounds like more of a U.S. case for let's take them on now. I see the U.S. poking the tiger in the eye over and over again. You have contacts in the government. When are we going to war with China? And what is going, when are we going to do it? Because we know as time goes on, it doesn't work to our advantage, right? If we're going to do it, we need to do it if you're a warmonger and you want the hegemony.
I got to give you a hesitation on that. Our military is way ahead of the journalism about the state of China. They now know that China, number one, has stopped growing and will not resume high growth again. That the high growth story is over. So second, they believe that the economy will start to show visible signs of decline soon and will continue. So now I'm familiar with this because I just did a paper with a colleague on what is really going on in China. And that paper somehow found its way all the way to the top command in the Pacific of the U.S. military. And I've had feedback. They are convinced that China is now facing a catastrophic choice. If they go ahead, it's not at all clear they can come out of it strong. And but if they do nothing, Xi Jinping is worried about all this congressional pressure to lock up technology transfer and block U.S. investment in China. So what's happening is China, outside investment into China in the first 3 months of this year, first 4 months, is shrinking to almost nothing. It's really, really amazing, the drop in incoming capital into China at the same time that their export orders, they have export orders from the neighborhood, the Southeast Asian countries, but export orders from Europe and the US are really almost no increase. So they're now facing that they may have to lift the economy internally, but they don't have the capability to do it. So they're in a mess. I doubt whether they are able to decide to go to war at this moment.
Okay. All right. Usually, when things are bad economically, that's usually when the government stirs up nationalism to distract the population from them not having enough rice to eat.
Yeah, that's the old theory. But war has become so bloody expensive.
Yeah.
Wars are not the way they used to be. You want to go to war, your starting price for war is $500 billion and going up depending on how long you want to fight.
Yeah.
They're not ready for that.
Okay. All right. So let's switch gears to another war. Will the Ukrainians have success on their counteroffensive trying to retake Crimea?
They'll have some success, but I think what's going on behind all the discussions back and forth, U.S. and China, I think Biden and Xi are going to take a chance to work together, lean on Putin, and start ceasefire talks.
Okay.
And
negotiate it out.
Yeah, that would be a big plus for Biden. It would be a big plus for Xi because it would make him look like a peacemaker. So that's going on in the background, and we'll see how it plays out. in the coming weeks.
Wouldn't the worst case scenario be that Ukraine is too successful, that they embarrass Putin on the battlefield, and he feels desperate enough to use the tactical nukes he's put in Belarus?
Well, that's what everybody's worried about.
Okay.
I have a lot of, it's, we just don't know about that, but humiliation would be bad.
Yeah.
So whatever is done has to be not humiliating. Now, there are other things going on in the background. Number one, liquidity in the financial markets is drying up. Banks in Europe are not lending. U.S. banks are not lending.
Yeah.
So all the lending that's going on is from non-bank credit.
I was going to just go there. Great segue. So, before your previous interview, you had sent me some work on the shadow banking system.
Right.
So that's the only source of credit now. And you were worried about the credit event that you were worried about wasn't SVB, was it?
No.
Okay, no, and that wasn't credit then. That was solvency because of their negative positions in bonds, right?
Yeah, and I'm not worried about our regular banking system. We have some hiccups, but it's the
Do you think that the banks, and this is floating around here, I want to ask you only for my benefit if I should go to the bank today, are we coming closer to banks being put some type of law or rule to limit cash withdrawals from your account?
No, the problem is not with the banks. Now, to put it in perspective, the non-bank area, you think private equity, but the non-bank credit providers include big insurance companies, endowments, pension funds like CalPERS. They're all in this. They're all lending money. Now, the size of non-bank financing is 60% of the total credit market in the U.S. It used to be smaller. The banks are only 40%. So we're going to see a lot of pressure. It's going to build probably most visible in commercial real estate.
Yeah.
And by the way, commercial real estate in Europe is really vulnerable. I think you'll see that's where the pain really starts to show. But a lot of investors, including insurance companies, have big portfolios in commercial real estate. When the market goes down, they're going to have to unload some of that. We have a credit.
We have a pension crisis brewing, and the pension guarantee fund is just a couple of drops of water compared to. Is that going to be a public bailout of the pension system?
Well,
why do you laugh? Why do you laugh?
Well, it seems to be the government. Every time we have pressure, we bail out whoever it is.
Right.
At some point, we're going to run out of.
All right. Well, let's talk about this then. Okay. A little bit about the debt ceiling. So here's your long-term treasury chart right here. That's a TLT. It's like the 20-year bond. So the narrative is, now that we have a debt ceiling passed, the Treasury has to fill up their pipeline again with cash by offering notes and bonds. And to me, when I look at this chart, it looks like yields could go higher, that the low that we put in October, which was the high in yields, could give way and we could make another low. Do you think that there's going to, are we in a sovereign debt crisis here?
And I'm not worried about the dollar. We can talk about that after.
The bonds, not the dollar, the bonds, the debt. Are we in, who's going to buy who's the buyer for all the bonds that are going to come to market?
The buyer is going to be many.
Not China.
No, but Europe, Latin America.
Okay.
Yeah.
So you
Don't
still
worry
think there's
about
an appetite?
every time there's a bond auction by the Treasury, but whatever the maturity, in recent weeks, every time foreign buyers are 3/4 or more of the buyers. I mean, there's no problem. It's not a problem. It's not a dollar problem. It's a problem all over the world. And
debt.
And the borrowing of Treasury in the next few weeks is so big, it's going to trigger credit contraction among the non-bank lenders. We're going to see at the beginning, going into the second half of this year,
crowding out.
That's right. We're going to crowding out, and it's going to be very painful, and the recession will finally become real, and it will become deep.
Okay. When will the Johnny-come-latelys recognize we're in a depression? Is it going to take a stock market decline for people to say, hey, I guess there's something wrong? Because the markets have been very strong as of late.
Well, yes, but the biggest market participants, the giants, they're all going to cash, getting ready for what they see is coming. So mostly people in the market now are retail. And as always, they're the ones who are going to get stripped when it all happens.
Okay. Who's going to be the Republican candidate for president next year?
Well,
you know everything. Come on, Harold. Who is it?
Look, the list is growing.
Is it going to be Trump Biden again in 24, Harold? Your gut.
He will try. I can't bet for a reason unrelated to everybody else. The prosecution of Biden, the serious parts begin in Georgia, and then this documents thing, everybody thinks is, misplaced paper, what's the problem? The real problem is some of those papers were made available to the Saudis and maybe the Russians. So there is a question, who did it? Was it Trump or was it his son-in-law? That's the speculation. And how bad does it hurt him? Now, if we take Trump's personality, if his son-in-law goes down, probably he would shrug his shoulders and not worry about it.
Yeah, see you in 20. Do you like the gold market in this environment?
Yeah, in this environment where everything is going to look really unfirm, you don't know where to grasp it. I think that anxiety is going to raise gold as at least something that seems to be insulated from the turmoil. So where I know it's popular to say gold may be in for another downturn, but given the world that I see of total confusion and credit contraction that is severe, I think gold will look better.
How about oil? OPEC keeps the Saudis and OPEC keep trying to cut supply, and they get rallies for a week or so that end up fizzling out. And there's also talk about Russia leaving OPEC. What's your view on oil? 100 or 50?
No, it's probably going down. The demand, problem is demand is so
destruction.
Weak.
Yeah.
It's demand destruction.
Yeah.
And so there's a downside maybe, but there is no upside from here. I mean, you'll get plenty of people who tell you why it must go up, but the answer is there's no demand.
Okay. Well, take away from Harold go ahead. You have something to add to that?
Yeah, just the economies of Europe And most of the developing world, with the exception of India, are all going to be in contraction or near contraction. So the demand for oil is going to diminish. It's going to, it diminishes. And nobody's factoring in a global downturn. Nobody's thinking about it, but that's what's coming. Very weak. U.S. maybe not as badly hit as everybody else. The dollar probably gets stronger because it'll be the only safe place to park.
Okay.
And all this phony baloney alternative currencies will crash because if you try to load a boat and ship it somewhere, you're going to need letters of credit and you're going to need international insurance. And the only place you can get that is in London or New York in dollars. So all these people talking about what is barter is fine, but you can't, that's not money. If you want money, you have to go to the dollar to make the deal.
Yeah, so just like Jim Cramer says that that earnings are the mother's milk of equities, credit is the lifeblood of the economy, and that's going away. So, and also the takeaway that if you're, still doing business in China, think about it. And the yuan.
Think about it, not too long.
Yeah, get going. Yeah, get out of there. And it's a shame we have to get out of here, Harold. But great talking to you. What are you telling people to do? Just cash and gold for the next 6-12 months, and just be concerned about keeping the return of capital instead of the return on capital?
Yeah, absolutely. Your earnings are going to be coming down. This is the time for safety and consolidation to prepare for the opportunities coming.
Yeah, because it'll be after this contraction, you look for a recovery and a renewal and maybe something very nice on the other end of the dark tunnel.
Yeah, and I think it'll be U.S. led.
Okay.
Because we have so much technology coming. I mean, I just think the U.S. will come out well ahead of all the other countries.
Okay, spoken objectively from a patriotic American, Harold Meldrum. And Harold, thanks so much. We'll be catching up with you in the fall, and we'll see a lot of these things should be manifesting by then, don't you think?
Yep. Well,
let's
see. Unfortunately, everything I've been saying for the last several months I've been hitting it, nailing it. So I hope I'm right, but I see no reason to doubt what I'm saying. Okay. And nice to talk to you, Dale.
All right, Harold Meldrum, everyone follow him on Twitter at Hale's Rethink. He'll make you rethink like he does every time I talk to him. My appreciation to you, Harold, for being a contributor here on F.A.C.E. Thank you very much.
Bye.
All right, that's a wrap, everyone. You could join the team in 17 minutes on the Morning Edge. Hope you enjoyed Harold. Play this interview again and get prepped. And don't just count your pips, count your blessings. Adios. Thanks again, Harold.